You are tuned in to The 5-Minute Signal, Business and Wealth. I am Vivian Thorne, economic strategist. This is not a finance podcast. This is a blueprint for building and defending your economic fortress. We don't do speculation here. We do strategy. 5 minutes on the clock? Let's get...
The news today is a quiet earthquake. While the financial media is distracted by geopolitical theater in Greenland, a massive structural shift is occurring beneath the surface of the US equity markets. For the last 13 trading days, the Russell 2000, the index of American small-cap companies, has outperformed the S&P 500. This is the longest streak of small-cap dominance since June 2008. The Magnificent Seven trade, which has carried the market on its back for 3 years, is officially tired. The smart money is no longer chasing the same 5 tech stocks. It is rotating aggressively into the real economy. We are seeing a capital flight from overvalued software into domestic manufacturing, regional banking, and industrials. Why it matters? You need to understand that markets move in regimes, not just cycles. The regime of 2023 through 2025 was defined by scarcity of growth. Investors piled into big tech because nothing else was growing. That regime is dead. The new regime of 2026 is defined by protectionism and re-industrialization. With tariffs protecting domestic industry and a government obsessed with supply chain security, the companies that actually make things, move things, and build things are the new growth engines. If your portfolio is still allocated like it's 2024, heavy on AI software and light on industrial hardware, you are fighting the tape. You are holding yesterday's winners in a market that has already moved on to tomorrow's leaders. This rotation is not a blip. It is a repricing of the American economy.
The hard truth is that your portfolio is likely hugging a ticking time bomb. Most investors are suffering from recency bias. You look at your Nvidia or Microsoft gains and think, this will go on forever. It won't. Valuations in the AI software sector are priced for perfection in a world that is becoming increasingly imperfect. Meanwhile, the boring companies, the metal fabricators in Ohio, the logistics firms in Texas, the regional banks funding local construction, are trading at historic discounts while enjoying a massive policy tailwind. The easy money in big tech has been made. The next wave of wealth will not be found in the cloud, it will be found on the ground. If you are too lazy to look for value outside of the top 10 holdings of the S&P 500, you deserve the underperformance that is coming. The actionable move: we do not get nostalgic about past gains, we position for future flows. Here are 3 tactical steps to execute the great rotation.
Number 1. Rotate to the rugged. Shift a significant portion of your equity exposure into US small-cap industrials. We are not talking about buying the index blindly. We are talking about targeting the industrial renaissance. Look for the ETF tickers like XLI or IWM, but specifically drill down into the subsectors of defense aerospace, machinery, and electrical equipment. These are the companies that will build the factories, the grid, and the defense systems of the new protectionist era. Number 2. Short the hype. It is time to trim the fat. Take profits on AI software companies that are trading at 50 times earnings but have no moat other than a chatbot. The market is waking up to the fact that AI is a commodity, not a monopoly. If a company's entire value proposition can be replicated by an open source model in 6 months, it is a zero. Sell the story stocks, keep the cash, or redeploy it into assets with tangible book value. Number 3. Follow the capex. Do not buy the company renting the servers, buy the company building the data center. The massive capital expenditure boom is real, but the money is flowing to the construction firms, the engineering consultancies, and the HVAC providers who keep the machines cool. Look for regional engineering firms with strong backlogs. They are the ones cashing the checks that big tech is writing. I'm Vivian Thorne. This has been the 5-Minute Signal. Stay sharp. This program is for informational and educational purposes only. Economic strategist Vivian Thorne is not a licensed financial advisor.
This content is not a substitute for professional financial, investment, or legal advice. Always consult with a qualified professional before making any financial decisions.